Good morning, everyone. My name is Annika, and I am part of the Supercluster team as the Membership and Communications Coordinator. And I would like to welcome you all to today's proposal budget workshop. Before we get started, a few housekeeping items. We will be recording this call so that it can be used as a resource for yourself and your team as you work through your project development. And both the recording and the slide deck will be shared with you following the session. We also ask that all participants keep their lines on mute during the presentation to avoid any feedback. As the majority of the Supercluster team is based in Vancouver, British Columbia, we would like to acknowledge that we are gathering virtually on the traditional lands of the Musqueam, Squamish, and Tsleil-Waututh nations. Before handing things over to Tanya and Nadia from our programs team, who will be leading the session, our goal is to have this be engaging and informative. So if at any point you have a question during the call, please feel free to type it into the chat box and we will answer them in queue. So with that, I will hand it over to Tanya.
Thank you very much, Annika. Okay, so as you get the PowerPoint started there, thank you again, Annika, for the welcome and the introductory comments. And thank you also to all the participants who were able to join us today. I know December is a hard time to find space in your calendar for meetings, so much appreciated for everybody who can join. And as Annika said, this will be recorded and distributed after for anybody who needs to rewatch, or anybody from your teams who want to watch again at a future date. So as Annika said, my name is Tanya Keefe. I'm a program associate with the Digital Supercluster, and I'll be co-leading this webinar with my colleague Nadia Sheikh Naim. This webinar is the third of three webinars for our Cycle 4, for the Supercluster Cycle 4 call for proposals, designed to share information with any project teams who are interested in submitting a proposal for this Cycle 4 call. The first two webinars were on the art of collaboration and on intellectual property, and they were conducted earlier this month. And I do recommend that you listen and watch those webinars if you haven't already done so. Those links are on our website, and then Nadia can probably provide, or sorry, Annika can probably provide them in the chat here as well. Today's webinar is specifically designed to provide information on the financial and budgeting aspects of a Supercluster project and Supercluster proposal. So with that, we'll move on to the next slide. So in the 90 minutes that we have together today, and hopefully we'll be able to make that a little bit less to give you back some of that precious time in December, we will go through the following agenda items. So for introductions, we're going to walk through a bit of a who's who in terms of the support team from Supercluster for Cycle 4. I'm going to speak to the Supercluster co-investment model and give some principles around that and how it works. Nadia is going to speak to funding flows and also do a walkthrough of the actual Excel file that is the budget template, which will hopefully be very informative for you at a guidance, high-level information setting today, and then for you to actually refer to as a useful reference as your teams are going through the budget development as your projects build out through the proposal stages. Then we'll go through some best practices and guidelines, and of course have time at the end for any questions and answers that aren't raised during the course of the presentation. So hopefully what's on your screen right now are familiar names, if not faces. These are some of the Supercluster team, and specifically the support team for the Cycle 4 proposals. So Karen McClure is our VP of Operations. Elaine Wandler, Francesca McDowell, and Ian Evans are investment leads. So as you go through the proposal stage, you should be connecting with one of them to be supporting you specifically developing your proposals. Karima and Jen are supporting on intellectual property aspects of the project proposals, and Nadia, myself, along with Wade Atherton, who is our Director of Finance, as well as his whole super finance team, will be supporting on the budget elements. Next slide. Okay, so with that overview and introductions, we'll move on to what is co-investment. What is this supercluster co-investment model? And anybody who has spent any time with the supercluster in previous rounds or has listened to any of those webinars that I referenced for the cycle 4 call already has heard the word collaboration many times already, and you know that collaboration is at the heart of the supercluster initiative and what we do, collaborative research and development projects. And that tracks through, that principle tracks through even on the financial level. And so co-investment refers to the supercluster working together in collaboration, in partnership with the project teams to co-invest on the R&D project. And in the tech leadership program, that co-investment percentage from supercluster side is up to 43% of eligible costs for eligible organizations. And we'll unpack that a little bit more in the next couple of slides. So next slide, please. Before I go through these bullet points, I just wanted to frame the co-investment model a little bit by referencing that the supercluster initiative, there are 5 superclusters across Canada. The Vancouver-based one is the digital supercluster. And the supercluster initiative is funded and supported by ISED, which is the Ministry of Industry, Science, and Economic Development. So the framing is that these are taxpayer dollars coming from ISED, a ministry that is, of course, interested in science, industry, and economic development. And what we're overall interested in is co-investing in R&D projects that are designed to solve some of the biggest problems that are facing Canadians and even the world. So in order to facilitate and assist with your R&D projects, co-investment is designed to support explicitly those projects. So it is based on a cost recovery model of eligible expenses. And as the language here says, eligible expenses are those that are directly related to a project. So the supercluster is interested in co-investing in the project itself, staff working on it, subcontractors work on it, equipment that you need to purchase specifically for the project. And what this means is that it is not co-investment on overhead, normal costs of doing business, or of course, other projects that you might have outside the supercluster. In addition to eligible expenses, we also have to factor in eligible organizations. So eligible organizations for supercluster co-investment in the tech leadership program are for-profit members. Those are industry members, businesses, both small and large. And also not-for-profit members of supercluster can be eligible for supercluster co-investment if their funding is primarily sourced from private individuals or private organizations. Again, co-investment is calculated as 43% of these eligible project costs for eligible organizations. And the last point here is to highlight that the cost recovery, so the cost reimbursement timeframe that we're working on for cycle 4 is on a quarterly basis. And what the supercluster means quarterly, we don't mean fiscal quarters, we mean 3-month blocks of time. So from whether you start your project in January, February, March, each 3 months would be a quarter for us, and your costs would be accrued during that time, and then you would submit your claim for that 3-month time block and then have your co-investment received subsequent to that. Next slide, please. So again, emphasizing and elaborating on the messaging here that this is cost recovery for actual costs incurred on your project. So when you're doing your budget template, as Nadia's going to walk through shortly, you would put in estimates for your salaries, and they would calculate, the budget template would calculate for this program 3% in benefits. And then what happens is when you get to that claim time, you submit the actual costs with the actual benefits, and then that is what the 43% is co-invested against. Recognizing that this is taxpayer dollars and recognizing that the supercluster is interested in facilitating R&D projects that your companies are then going to be able to take and commercialize and make accessible to the Canadian market and hopefully even more broadly. For the R&D portion, for what the Supercluster supports, this is co-investment on your actual costs, not making a profit for the partners. In addition to cash costs, such as sub fees for purchasing equipment, for salaries for contractors, your existing commercial offerings can be contributed to the project and co-invested on. So an example of that is a company that has a software platform that is essential to the project team in order to build on it to create your new offering. And that can be calculated at the fair market value, brought into the project budget and co-invested on. Last point to discuss here is this is a principle of equity and all project partners being involved and having not equal but equitable skin in the game. So we want to make sure that all the project partners are engaged and are participating equitably. And in terms of the budget, that equates to what level of investment, of co-investment, each member has. Next slide. And so with that, with those principles on what the co-investment model is, I'll turn it over to Nadia to talk about the funding flows. But it does look like we've got a question here before we switch over.
Yeah, there was just a quick question regarding eligible expenses. So does this also cover in-kind contributions or only cash?
It's generally cash, and it's generally not in kind. We don't really use the term in kind for Supercluster projects. What we do use is that existing IP that I referenced. If you've got a software tool or a platform that you would be contributing that is already commercialized and so has a price tag attached to it, so that can be factored in. I'm seeing the question here on co-investment requirement from academic institutions. Is that a different one? Okay, I'll move on. I can see the question here from Carl Steves on the co-investment from academic institutions, so I'll answer that. And then if there's any follow-up to the one that you just referenced, Annika, let me know. In terms of eligible organizations, as we referenced in that slide a moment ago, for-profit organizations and not-for-profits, if the majority of their revenue comes from private institutions, are eligible for Supercluster co-investment. Academic institutions in the Tech Leadership Program are not. But you do need to have an academic institution, a PSI, a post-secondary institution in your project. And that is actually a very good question for the section that we're coming into right now, because that speaks to the funding flows of how your different types of partners can come into a project and contribute, and ensure that their costs are being appropriately allocated and co-invested where eligible. So I'll wrap up that answer there and then turn it over to Nadia to go through the funding flows, where that academic institutions example can be discussed with a slide to speak to it in more detail.
Perfect, thank you, Tanya. So before I move to my section of the slide, I did want to say hello to everybody and welcome you to the workshop. I'm also personally extremely excited and in awe of all the ideas that have been coming in through this cycle and the cycles before. And I know that Tanya and myself and the rest of the Supercluster team are super excited and stoked to be part of your journey and look forward to supporting you towards making Canada and the world a better place with your digital solutions. But before that, we do need to get through the co-investment world, and we do need to make sure that you guys understand the Supercluster speak. So back to the co-investment and the calculations and the agenda item that we have here for you. So taking from where Tanya kind of left off, which is, just kind of giving you a sense of what the model is. In this section, I'll walk through at a high level how we calculate the co-investment, and hopefully help you orient a little bit on how the cash flow will work for your organizations. I do want to prefix that this conversation with the recognition that each of our projects is unique, each consortium member is unique, and that is why we do understand that we will need to work with you one-on-one to really understand some of the nuances and specificities of your project and budget. So while this workshop is at a pretty general and generic level, as we unpack your projects and during the MPP stages, we will be working through those, through your questions and through your specifics during that time. Okay, so let's get back to calculating the co-investment. So the co-investment is calculated in a fairly systematic manner, and to do this, the basis of it is on the cost of delivery of commitments, to really understand what are the core deliverables that the project needs to deliver, and what are going to be the cost of delivering that work. Having an understanding of what those delivery commitments are, so we refer to that as cost of work. We then will make adjustments for any intra-consortium payments. So to answer the question that was asked regarding the PSIs, we often do see that through the intra-consortium, so various consortium partners will take on payment for the PSI, or they will do that through a MyTax sponsorship. So we'll go through that example when I go through the Excel file for MyTax. But often, they may be also industry partners that are larger firms that may be open to funding work done by SMEs or for non-for-profits that are part of the organization as well. So those intra-consortium payments are then adjusted against the cost of work. So if you're receiving funding, we would deduct that from your cost of work. If you are giving funding, we would add that, and that will bring us to the third box over here, which is net costs. And so the net cost is that adjustment, is that adjusted cost that each consortium member is going to be incurring on the project. And this net cost is the basis for most of the calculations that you will see at this point, moving forward. So the Supercluster co-investment is calculated with the co-investment rate, which is up to 43% against the net cost for eligible members. So as Tanya said, that would be your industry partners or your non-for-profits that are primarily have private funding sources. And are members of the Supercluster. So those are the parties that are eligible to receive the Supercluster co-investment. The remainder of that, so the net cost minus Supercluster co-investment, is your member co-investment. So that's equivalent to the amount that each consortium member will be putting towards the project. So when we refer to skin in the game, we often come down to this member co-investment. So that's a lot. I know there's only like 5 boxes in there, but there's a lot to unpack. So I've got some simple examples coming next. So if Annika, you can move to the next slide. So here we have an example of a consortium member who is not receiving any funding from any other consortium partners. So their cost of deliverables is 100K. They're not receiving they don't have any agreements with any consortium partners to receive any funding. Their net cost that they're incurring on the project is therefore 100K. Assuming that this partner is eligible to receive Supercluster co-investment, they will receive 43K from Supercluster, leaving 57K as what they would have to internally fund themselves. The second example, so next slide. In the second example, we're looking at a partner that is receiving money from another consortium partner. So we have their cost of deliverable to be 100K. They're receiving 20K. Their net cost incurred will therefore be 80K. And it is on that 80K that we're calculating their co-investment. So they receive 34K from us, and we would see that they would have to internally fund the 46K. And the final example that we have here is the generous consortium partner who is giving the 20K to another consortium partner. So we have, we will go back to the simple example that this consortium partner is also incurring a cost of 100K. They're making an additional, payment to another consortium member of 20. So the net cost that they have incurred on the project is 120K. So their own work plus any payments that they've made to the consortium partners. And as a result, their co-investment, so that 43% on that 120K is 52K, leaving them to internally fund or the member co-investment at 48K. So, so those are just some of the high-level examples, and of course they're rounded and much simplified in this case. But it's just to give you a sense that there are adjustments that are kind of need to be made. And when thinking about the supercluster budget, and especially with the complexities that can arise through intra-consortium payments, it is important to systematically build out your costs, based off your cost of delivery, payments that will be made, and then moving towards net costs. If you and I've seen that if you try to go ahead too fast, it often becomes convoluted, and then you're spending a lot more time trying to unpack it. So it is a model that requires you to be systematic, and it is a model that requires you to kind of give time to each bucket, and build on each item one at a time. Next slide, please. So we have, as part of our consortium building and in the name of collaboration, we have seen funding arrangements that have extended beyond the intra funding. So we have seen partners, consortium partners, some of the larger ones, really step up and look to support the SMEs, non-for-profits and PSIs, beyond the intra-consortium members. And so while this isn't very common, it is becoming more, we see it more often. So I wanted to make sure that I kind of speak to it over here. So we have 3 special funding arrangements that some of our consortium have within them. And these are really linked to either external funders, so they're not part of your consortium, but they are parties that want to support the work, or we may have organizations that would like to share the supercluster co-investment payments with the party. So this is often done as a pool that the consortium can draw upon. It has been done as from one partner to another partner, and this is something that is usually negotiated within the consortium, and then the funding arrangements are executed with the supercluster. So we have reallocation. So in terms of reallocations, what that means is that the funding partner would work with superclusters so that we directly pay the consortium partner on their behalf. It reduces the administrative overhead for the funding partner in this case. And reinvestment is a unique case in which we have consortium partners that, in addition to the payments that they're making to the receiving consortium partner, they are also asking Supercluster to directly reinvest their Supercluster co-investment to the recipient consortium partner. So the consortium partner ends up having 143% of the committed amount coming to them. And then we have stacking. So many of you who have worked with other federal government programs and provincial programs may be aware of this term. So in stacking, where we often see it is with the external funder. So we may have some party coming in that is providing funding to a specific consortium member to cover the member co-investment portion of it. An important aspect to remember about stacking is that we would look for it to cover no more than 100% of the total cost incurred on the project. So this goes back to the point, to the principle that Tanya had raised before, that we are, the supercluster model is not one for profit making. It is really de-risking your R&D initiatives, and we are partnering with you to do that. So next slide, please. So some of the special considerations that you have in your budget, as you're working through your budgets, and these ones do require pre-approval either from ISET or from our finance department as we're going through it. And in terms of the FPP, so within the scope of the FPP, what we're looking for is really for these items to be flagged and for us to get a basic sense of it. Where we will actually get the pre-approvals and where we will probably work with you to dig in deeper into the details will be if you are awarded the project and we go through contracting. So just to keep that in mind, so we have foreign costs. So any work or purchases that are done outside Canada. So these require ISET pre-approvals. So this includes work that is done by your non-Canadian subsidiaries. It also includes if you have experts who reside outside Canada and are working on the project. So it's best to raise it as quickly as possible so that we understand what are the, if we have any clarification questions to ask ISET, we have enough time to do so and are not doing it in a rush manner and impacting the project. Equipment purchases exceeding $1 million. So that would require ISET pre-approval as well. So we have a form and we would probably work with you and in conjunction with our finance team to get that pre-approval in place. Capital expenditures, so those are long-term expenditures. Our finance team would need to engage with your finance department to understand the accounting practices, and really this is so that we understand what the residual value is of the expenditure at the end of the project, and we sort of make the adjustments accordingly. And for existing IP, so this is the commercial IP that projects may be contributing to the consortium members may be contributing to the projects. So for these ones, as Tanya had spoken to earlier, these are fairly unique in how they are treated within our budget and how we claim, how we co-invest on them. So unlike all the other expenditures where we are investing on cost basis, the existing IP we are doing on your fair market value, albeit a discounted version of it. So we do need to confirm that it is an existing commercial offering, and we would need to work with our finance department to ensure that the evidence that is provided for the fair market value, so that's your sale price that you are using for the project, is appropriate and that they feel comfortable that it is complete. So these are items that, as we're working through the budget, we will be flagging, but like I said, we will probably close it out partially through contracting and then partially as you are claiming those costs. Next slide, please. Some other items to keep in mind, and I want to make sure that we raise it so that everybody's very clear and there's no confusion. And happy to answer more questions on it now or as you go through the budgeting. So tax and donations are not eligible costs. So I'm not sure if the earlier question regarding in-kind was in-kind in terms of donation, but those are considered ineligible costs. So we do not co-invest on those. This also includes any prizes that are given out if you are holding a competition or anything as part of the project. So all of those are also considered ineligible. Proposal and project contracting costs are also not eligible. So the time that you are spending now and the effort, though recognized that it is an incredible effort, is not eligible. It's considered like business development or is considered part of your administrative and operational cost. Your contracting cost, this is specifically related to your contracting costs for the project. So I look forward to you guys receiving your award letters, and then we would embark on a journey of contracting. And we have a contract which we refer to lovingly as the MPA, but it stands for like a multi-party agreement. So it is a contract that is for the entire consortium, brings them all together on one legal document. And it is only with that, once that contract is in place, that your co-investment payments can be made. Any time that is spent by your executive or leadership in terms of oversight and is considered routine administration. So that includes their time on the steering committees or in providing oversight or reviews of your documents. The only exception to that is if you have your CTO or you have like your chief legal officer or somebody who's providing very specific expertise advice on the project. So whether that is, you know, for your IP filing, so if it's your chief legal officer, or if it's your CTO looking at the technical architecture or supporting like with the integration work. Maximum allowable salary is $300K, so that's equivalent to $166 per hour. This will be the 300K. So if you have somebody who's making 301K, we would cap it at 300K. So that's how that is currently being applied. And so those are some of the things to look through. There's a lot more detail available in the co-investment guidelines. So you should be able to find a lot of information in there. And of course, happy to work through any specifics or nuances as we move forward. Next slide, please. So you know, just to kind of bring it forward right now is that as we said, it is members who are eligible for co-investment, but there are membership fees associated with it. And as you get your membership in place, so Annika will be supports that effort as well. So Bill, Tam, and Annika will be working with you to ensure that you understand what that fee structure kind of looks like. In the short version of it is that the member fee is made up of two components. So we have an upfront annual fee, which is $5,000 for a regular member, $10,000 for gold members. And then we have a project fee, and that is deducted against your net project costs. So 10% for your regular members and 8% for our gold members. So it's as you're working through with your finance departments and you're trying to understand your cash flows, it's important that you also keep that in mind, that those deductions do take place. So next slide, please. So I'll pause here for a second. I saw that there was a question, so I'm happy to answer that just to take a break from, from the world of slides. Annika, let me see what the question is. If they're contracting legal costs. So the question is, if there are contracting costs or legal costs to set up commercial agreements between partners on top of the master agreement that we may have with the supercluster, would this be eligible? So Sylvie, to answer that question, so some of the commercial agreements, it's a maybe, this one, and the reason that it's complicated is that the model really takes us all the way to right before you become commercial. So that's the supercluster model. If setting up the commercial agreement and having those reviews is part of your deliverables within the project, yes. If it's cost that you're incurring before we have signed the project or specifically before the project has been awarded, then those are not, so that is outside the time frame of the project and we won't be able to co-invest on it. And if they are, again, if it's after the project, then no. My recommendation would be that as you are working through your projects, to have that built into parts of your deliverables and make sure that there's a comprehensive task towards commercialization built into your approach, if it is appropriate for your project. We have some projects that are early R&D where it isn't clear and they're not ready to make those agreements. If it makes sense for your project, that's how you can bring it on board. Okay. So next slide, please. So in this section, we're going to go through the budget template, and if you are like an Excel fanatic like myself, then this is your section. You guys are gonna, yeah, it's fun. If not, like then we're just gonna have to brace and live through this Excel work through. So I think before starting and going into the Excel world, let's I wanted to just explain what the budget template is. And I think the best way to explain what it is going into the negative and explaining what it is not. So it is not a project planning tool. We are expecting that you will have your project plan and you will use the tools that you have available that you are comfortable with outside the budget template. And in fact, before you even crack it open. And for those of you sitting in the peanut gallery and saying, well, it says budget right in the title, and why does it say it's not a budgeting tool? I know we need to come up with a better name for it, but it is not a budgeting tool. We do expect that a lot of our organizations are using their own methodologies for budgeting. You may be applying standards, you may be using earned value, you may be using other elements in there. What we are, this template will not be doing any of those things. So what is the proposal budget template? So it is really a reporting framework, and the intention of it is to standardize how we receive the budget information on our end so that we can understand and we can recognize some of the payment and funding arrangements that are in place and use that to determine the Supercluster co-investment amount. It allows us at the Supercluster to be able to compare budgets. It also allows us to review and understand and pick out some of the special considerations that are there that we kind of highlighted earlier, and they may be others as well. And it gives us it also allows the consortium members to really ensure that they are talking to each other and seeing it put in a slightly different format allows members to kind of question each other and supports the negotiation and the finalization process that is so much at the heart of Supercluster projects, and it pretty much starts right from the beginning. Next slide, please. So like I said, before you even start on the on the proposal template, there's a couple of things that you do need to have in place. And speaking from experience and speaking, on behalf of a lot of the consortiums that I have worked with, and Tanya and our other program associates that we have worked with, if you start too early and you're not ready for it, you will be stuck in many iterations of like Excel template hell. It will be very, you will be trying to update information, and it is Excel, and it is it has its limitations because it is Excel. So you should be prepared before you open the template and start plugging in values in there. Some of the things that you should know is that you should know the investment model. So yay for everybody who's here, because you're one step ahead of most of the people. Make sure that you've read the program guides and the co-investment guides and other available Supercluster resources. So you have Tanya and myself, you have your investment leads, and you have all the other parties. All of our team is available to kind of guide and support that process for you. You should, before you even open the Excel file, you should know what your project roadmap is. So this is not the full-fledged project plan, it's not the integrated plan, but there should be a sense of what are the key deliverables that are needed to achieve what are the strategic plans for the project. So what are the major high-level steps that need to be done? What is the sequence of those steps, and what are some of the expertise that you need to kind of get that into place? You should know who is part of your consortium. So who is working on those major deliverables, and you should have some sense of if there's delivery capacity or expertise that is missing within your consortium and how that will be filled. And so if you are looking to bring in subcontractors to kind of fill that gap, then that should be a discussion that is had. For subcontractors, just to put it as a side note over here, it is usually the party who holds the subcontract is responsible legally for the deliverables or the delivery commitments of that subcontractor. know your cost of deliverables. So have a sense of what it will take to get those deliverables in place. So that means understanding the resources, not only the human resources, but if there's equipment, there's facilities, you need infrastructure, what will be required to get those deliverables in place, and have a sense of what that looks like. And then once you have all of that, then have a discussion about who is paying for the cost. So if you have shared deliverables or shared cost, that you may want to share with your consortium partners that you want to share these costs. So if you have infrastructure, we have often seen some of the infrastructure costs being shared, some of the project management costs being shared amongst consortium members. You may have like an industry partner that is coming in as a potential first-time customer or is providing the customer role that may be willing to cover the cost. And just like good friendships, consortiums can be broken because of misunderstandings in financial commitments and promises. So make sure that you have those conversations and you have clarity on it. And the budgeting template and the contracting process, we will ourselves at the Supercluster be asking a lot of those questions from you guys to make sure that you have understood what each partner is expecting in those arrangements. So next slide, please. So before we open the Excel file, so a couple of things to keep in mind as you're working with the budget template. So one, yes, as I've said, it is an Excel file. So it is created in Microsoft Excel and works best with Excel. I know some of you are using Google Sheets and you're using some other programs. There are some significant formulas within the sheet. That work best if you are working with Excel. If you are using another program to work on the file, and there are some problems, we'll try to support that, but there's a limitation to how much we can support it if it's not in Excel. Just like those boxes that we went through and my spiel that that everybody needs to be systematic and they need to be organized as they're working through, the Excel sheets are just kind of work in the same manner. So all of the sheets, there are a number of worksheets that need to be completed, so you need to be completing them left to right, top to bottom. So it's both systematic and sequential. So as you're working through them, if you skip a step, there are like formulas that build on previous information that sort of conk out if you're not following the right steps. So the worksheets are protected, and we do that so that we manage the integrity of the formulas. And it's important for us because, as you can tell, there's a number of adjustments and things that we need to keep in mind as we're calculating the co-investment amount. So the sheets are protected so that the formulas are protected. However, because of this, there are limitations to some of the Excel functionalities that you are used to. So, number one, you cannot cut and paste. So while, the Excel will move the references when you do the cut and paste, so the formulas can break. In addition to that, they may, you won't be able to add some of the some rows. You may or may not be able to hide and unhide columns. So I just want to make sure that we recognize that it makes it difficult to work with the sheet sometimes, but we need it to ensure the integrity of the formula and the information that we receive is complete. Excel does not lend itself to rounded up numbers, but it sort of speaks to specificities. We recognize that these are estimates, these are budgets, this is an R&D project, and things will shift. So in terms of levels of details, you can round your costs, and you can also group your costs. So if you have a technical team made up of multiple developers, you don't have to put every individual member. You can just kind of round it up as development cost, or you can infrastructure, equipment, pull it all together so that we have a sense of it as we go. So the intention of the budget is really to help us understand the cost that will be incurred to calculate the supercluster co-investment, and it is you know, for us to kind of just make sure that everything is sort of aligned and makes sense. However, to be clear, what you will, the co-investment amount that you are actually going to be paid out will be based on the actual cost that you incur. So, so that you know, the claims process post contracting, once you've kind of started working on the project, that's when we're looking for the specificities and to the cent accuracy. At the budget point, we are not, and so I will not, I will restate that please do not cut and paste on the Excel sheet, because it will break your formulas and it will be a frustrating experience. Okay, next slide, please.
I'm just going to pause here, Nadia, to give you a little bit of a break before you get ready to do the walkthrough on Excel. As Annika has just let me know, we've got a question from one of the webinar participants here about customer partners. And so if there is a customer partner joining the consortium, would they become a member? Would they necessarily become a member of Supercluster? And a member, like a capital M member of the consortium. And that's, as Nadia said, each project, each supercluster project is unique, and each budget is unique. So we will work through these on a case-by-case basis. But if you have a customer partner that has very, very low costs for very low costs to be part of the project, and they're really there in order to provide iterative feedback to the developers, to the industry members of the project that are developing the tool, they may choose not to become a member of the supercluster. And rather be an advisor. They could be a member of an advisory group or an end user referent for the project without necessarily becoming a signatory to the MPA or a member of the project. So there are advisory roles to these projects that can be referenced as well appropriately. So it would depend on the specifics of the budget and the nature of the organization. And that's something that we would talk through in understanding the proposal and the budget development in more detail.
Okay, perfect. I appreciated the break. So yeah, so for the consortium partners, I think some of the elements to keep in mind, just to take from what Tanya just said, is that we, you know, to look at how integral is their role within the project and in the strategic vision of their project. So if they are going to be developing IP, then our recommendation, or they foreground IP, so our recommendation would be that they're part of the consortium. If they're integral to the project and the strategy of the project, and they want to be able to drive how the work is done, then we would see them be part of the consortium. However, if they're in the observer role or in an advisory role, they do not want to take the overhead of being part of the consortium members. It is a commitment. Then like Tanya said, there are many ways in which we've seen customers, you know, consortium partners who are acting as customers kind of engage with the party and not be part of the MPA. Okay, so for the budget template, ta-da, here it is. So here is the budget template. It is made up of these 7 tabs. So the tabs that require inputs are the gray ones, so A, B, C, and the existing IP details. The other tabs are primarily reporting and check tabs, and we've got, of course, the instructions tab. So if you're like me and to the bane of my family members, I never read instructions and I just sort of open the IKEA box and start working on it. Please do not be like me. Read the instructions. There's a lot of great information in there and it will guide you through the process. You can print it out and put it on the side if you don't like reading Excel, like I know many of us don't. So we do have the instructions tabs. It provides you information tab by tab, and also gives you a little bit of guidance on what we're expecting in terms of inputs in all the various fields. as I said before, we are expecting you to move from left to right through this worksheet. So tab A will be the first one that you would work through. So tab A, so I've got this as slightly, let me just close this window. Tab A is where we put the project information, and let me just make this a little bit bigger for everybody. And so this is broken out into the questions that I had asked you to answer before you even open the Excel file. So who are your consortium partners? So to identify those parties over here. So who they are, what is their membership level and their organization type. Then we have any funders that are part of the project. So these are funders who are not part of the consortium. So we have the MyTax example here, and then we have the XYZ Tech Inc., which is an external partner, external funder in this example that we have. We have the project quarters. So how will the project be broken out into quarters? As Tanya mentioned, the project is, the co-investment is paid out by quarters. And these quarters are so, you know, we will, while all strategic objectives may not be met during that quarter, we will sort of define what we would see as outputs or outcomes of those quarters, and there will be some reporting requirements that is attached to them once the project is live. So we'd like to understand what they are. So you would need to know the duration of the project and when the project is expected to start work. This, of course, will get updated and shifted as we go through the contracting and the award and other aspects of finalizing the project. And then what are the major deliverables? So in terms of major deliverables, we are really looking for significant project outputs. We are not, you know, we don't need to know your this is not expected to be you know, activity level, and neither is it supposed to be any sub deliverables within the project. So we're looking for the big highlights of in terms of delivery. And that is your first tab. So your first tab will, you know, it's primarily the information that makes up your consortium and how you are organized in terms of your delivery. So tab B is where you're gonna, is where everybody has a lot of fun. This is the budget, this is the cost of work tab, and this is where we see a lot of the budget information kind of being inserted into here. So we would have your major deliverables, and your major deliverables are pulled out from the from what you have completed here in tab A. So this will come in the form of a drop down. And for anybody who who's worked in, you know, has spent any time with these Excel files, you will recognize that when you change your inputs over here, you will need to go back and redo your, you know, your drop down again, just to make sure that the right information is updated. So Excel will not propagate that update across all the previous drop-down selections. So just to make sure that you keep that in mind if you're going back and changing inputs in tab A. The organizations that are doing the work, so this is, again, this is a drop-down, and it's taking this, the drop-down is taking its value from the consortium partner box in the worksheet A. So you would choose the deliverable, who is working on that specific deliverable, a description of the cost item over here. So over here you can see, you know, we've just used some generic terms to kind of, you know, to identify the work. If you have items like foreign costs, like we have over here, or you have a capital expenditure or anything like that, so we ask that you just sort of prefix that in your cost line item description, so that as a flag as we move forward through the process, then we can kind of work with those. Then we have your cost category. So we have over here 4 cost categories. So WAG, which is for wages. So these are employees that are working on your project. So the cons is for both contractors and subcontractors. So staff or organizations that are working on delivery but will be invoicing you. equipment for any equipment that you're purchasing. So matter is for materials, and other, so you involve, can include your IP costs, existing IP costs. It may include travel costs, and some other elements that may not readily fit in within these drop downs. In terms of expense types, we have 3 expense types. So these are cash costs, so which is a majority of the costs that you will see, that we expect to see in this budget template. We have IP, which is your existing IP, and then we have ineligible. So ineligible, so if you have any donations, any in-kind, any overhead that you would like to recognize as cost towards the project, but you know that you will not be getting co-investment on it, that would be an ineligible cost over here. For wages, so if your cost category is wages, what we would be seeing over here is that you could choose an annual salary or you could choose an hourly wage. So it depends on how you are working within your organization. For other and equipment and for material costs, the options, the drop-down options over here will be adjusted based off what you have there. So it's either going to be unit cost or lump sum cost. So for unit cost, what we are expecting is that you will have multiple units, and what you would provide in the cost amount, so that's the column right next to it, will be the unit cost. For the lump sum, it will be the full amount, and what we would be expecting is that the breakdown would all equal to 1. So depending on how you put that in there. The cost amount is what is the cost of the project line item. So based off what you have put in your cash type is what we would, that's the cost amount that we would be expecting. So if you have annual salary, we would be expecting a much larger number. So we'll be expecting an annual salary amount. But if it was an hourly wage, then we would see your hourly wage being entered over here, unit costs and lump sum accordingly. For your contractors and for your employees, so that is the wages and the contractor cost categories, you have the option of using either FTEs, which are, or using hours to kind of provide the breakdown of how the cost will be incurred across the project quarters. And then we have over here an adjusted cost amount. So for salaries, so for the cost category of wages, we will automatically apply a benefit rate of 3%. So this is only for budget purposes, that we apply the 3%. When you are claiming the amount, you will claim the actual amount for the benefits, and to note that it is only the statutory benefits that are eligible within the technology leadership program.
And I'll just jump in to make a comment here. I think, Nadia, you already mentioned it, but just since we're on this screen to make it clear for everybody, where you as the project team developing the proposal enter information is in the white cells, where for example, that column K there that's blue, that's a formula. So you're not inputting anything there, you're only inputting where the cells are white.
Thank you, Tanya. Perfect. And then, of course, once you have all of that sort of base information, what we'll be seeing is that among the quarters that you are going to be working on, how those costs will be distributed. So we may see, so I'm just going to make it a little bit smaller so that we can, oh, wrong button. So you can kind of see some of the distribution. So what we would be expecting is that, the project lead, for example, would be working on, the technical folks from working on this deliverable are working from Q1 all the way to Q4 in this specific example. And this is the distribution of their work based on FTE calculations. So once you have all of the costs sort of broken out across the quarters, so whether that is hours, whether that's FTE, whether that is units that you're purchasing, whether it's lump sum amounts, once we have all of that information together, we can then move on to the next sheet. To note over here, you can put it in any order there. In this example, we've sort of organized everything by major deliverables. We've had partners that sort of organized it by organizations themselves. This sheet is not picky in what order you put the information. So don't, you know, if you feel like, oh no, I had one more input on data requirements document, it is absolutely okay to kind of add it in whatever order you want. You don't need to kind of keep everything so consolidated as it is over here. Okay. So once you have the cost of work done, and like I said, this tab over here alone, you know, usually takes our team members, you know, about 10 hours or so to make sure that they get everything right in here. You will see if you are making, you know, as you're working through this sheet, there are little checks and balances here. So if you see a little, you know, if you see this red, you know, anything red in here, it usually means that there's an error. So in this particular case, an equipment cost type cannot go with hourly wage, and that is what the error is. And you can always check the errors. There will be an error message over here. And so once we put it back to wages, then it should be cleared out. So if you do see those red lines, those red highlights across the sheet, it does mean that there's an error, you know, in somewhere in the data input. If you're not able to resolve it, you can just, you know, send whoever is working with you on your budget like an email, and they can help you kind of confirm what the error is and what you do. If you are cutting and pasting, you will see a lot more of those reds come up, and that is, like I said, because the reference cells move with it. So it's now looking at the wrong reference, and so it will throw things off. So do not cut and paste. So once you have, so in completing tab B, you've got your cost of work. So that's the first block in the calculating the co-investment slide decks that we went through. Then we move to the funding commitment. So that's the second block that we're looking at over here. And this can be a pretty overwhelming sheet. So there's a number of tables that are over here. And we've kind of allowed you to kind of block and hide some of the ones that are calculated and don't require input. So in this particular sheet, there are two tables that need your inputs, and we'll go through table by table so that you understand how the calculations are sort of working through. So table C1 is a summary of everything that you have put in the cost of work. So what it is providing us, it is aggregating all the information by organization and by quarter, and it's giving us the breakdown of how the costs propagate through the quarters for each of the organization. So table C2 is your intra-project payments by quarter. So if you have organizations within, you know, who have made funding commitments, so we would put that over here. So what we would like to know is, you know, who the funder is, who is the recipient, and what are, you know, how are they seeing their payments sort of break down across the quarters. It is important to note that, you know, the payment that you're receiving cannot exceed what your costs are in the quarter above. So for in this example where the project lead is giving the university 20,000, and so the university, if I were to make this 50,000, I would get an error over here because it means that they're getting more money than the work that they have done. So again, so you would identify the funder, and these are all in drop downs. So you are able, so you would see, you can choose your funder. So whether it's a consortium member or it's any party who have been identified in the funder block. So you would identify them over here. And similarly for the recipient, you just pick the name from the drop down. The fields over here, these are dollar values. I do not recommend using decimals. You know, things don't always balance out. So round numbers work just fine. And these are, you know, so you just put your values in here so that we have an understanding of when parties are paying each other. Table C3 is your net cost. So that's that highlighted third box in the co-investment calculation slide. And what you have here is really the project, you have the table C1, so cost of work, plus any payments that you are making, minus any payments you're receiving. So these are your net costs. And this is the table, like I said, upon which we are calculating the co-investment amount. So table C4 over here is giving you that co-investment amount. So we can see that eligible organizations, so the project lead, some of these industry members that have been identified as for-profit or receiving funding from private sources, plus members of the supercluster are the only parties that have any co-investment assigned to them. The co-investment is of course calculated off table C3 over here. In the rare cases, so a majority of the projects won't need to use table C5, but table C5 is for any additional funding that your consortium may have. So if you have reinvestment, reallocation, or stacking that the consortium is lucky enough to have, we would kind of put that over here for you. So over here we can see that the industry, so one of the industry members is giving funding, and they're seeing that as a reinvestment. So what they are doing is that they are paying they're asking Supercluster to directly pay the full amount to the project lead. What that means effectively is that the member industry anchor partner is not going to be receiving any Supercluster co-investment. So their member co-investment looks slightly different. In this example, we also have the case of stacking. So we have the XYZ Tech Inc., who is providing $15,000 to one of the SMEs, and this is a stacked funding that the SME is receiving. So it's only covering their member co-investment, and we're not adjusting their project costs for this. So their co-investment is still based on the net cost and doesn't take into account this $15,000. Table C6 is it calculates so the net payment. So who ultimately will Supercluster be paying the money to? So the member industry anchor is seeing their partially their co-investment go down because they are not, the 162 they've asked for that to directly be given to the project lead. We see the project lead number go up. So these are just investment, and it's primarily for us in-house to be able to understand who we would be paying to, and what the partner co-investment, so what the member co-investment looks like. So that's table C7. So how much is each partner actually putting into the project? And so this is the final table here. But like I said, so all these tables that are all blue are calculated tables. You can hide them so they're out of mind and they don't clutter your sheet. If you're, I like to only focus on the sheets, on the areas that I'm putting data in. You can kind of work through that. And so those are the two areas. As I said, table C2, we expect to be populated more often than table C5. If you have existing IP that you're putting into the project, so specifically if in cost of work B here, you have any expense types that are marked as IP, we ask that you provide us with some of the information of some details regarding what that commercial IP is. So what is the name? So what is the commercial name of that IP? So, if it's, if you have a fancy like platform name for it, so what that is. What is the description? So we just want a high level description of what that IP is, can do or does, who the owner is. We want confirmation that it is a commercial product. So it does, in order for it to be eligible, it needs to be a commercial product before the award letter goes out. What is the proposed fair market value that you are applying to the project? And this, if you are applying a discount, then you would add that discounted value here. We would like to just get a sense of how you have determined the FMV value, so the fair market value. So did you use your sales price? Are you using previous sales? Are you, the unit costs, how you have applied the discount, etc. And what evidence you will provide to support the FMV. Like I said, we may ask for it before the contracting, during contracting or before claims, but during the claims process is when our finance team will do a full dive into those FMV supporting documents. We would like to understand what the role is of that IP on the project. So we often see these IP being contributed when the projects are an integration play, or we are working on enhancing or furthering a specific platform, but we would like to understand what is the success of the project, so that we can establish the importance and the direct relationship of the IP. There's a couple of considerations regarding IP as well. So there is a limit to it. So the budgeted value of the existing IP cannot exceed 25% of the industry contribution. And there's going to be a special claims process that goes with it as well. So we do want to make sure that the licenses that are being, or the commercial IP that are being brought to the project, are relevant to the project. And they are, and the rest of the consortium are also aware of it. And if there's, of course, any additional comments that you have. The second last tab here is really just a set of reports, and this is what we use at the Supercluster to make sure that things are aligned. And so it just gives us a couple of views and cuts of the report. I do recommend that you take a look at it, because it gives you a sense of how the numbers are propagating through the projects and through the organization and through the quarters. So the first one just gives you a summary of the funding flow. So what is the cost of work? Any funding arrangements? What are the net costs? The Supercluster, what is the Supercluster payment that is going out? What is the member co-investment? And then, of course, the total investment and some of the percentages over there. The second table here is providing a distribution of the cost across quarters and giving us a sense of which quarters are the expensive quarters and where work is being done, significant work. We may have spikes come up in quarters. So over here in Q3, there may be spikes because there's equipment being purchased, or we have more expertise coming in to evaluate the alpha version, or you have subcontractors coming in to support the go-to-market effort. So it just gives us a sense to understand how the project is playing out. Table 3 here gives us a distribution of cost by members. So what members and how they're, how much they're putting in towards a project. And again, this is a sense of, if everybody has a meaningful role within the project. Distribution of cost by expense categories. So this gives our finance team, and this is information that also goes to ISED to understand how the costs are broken down across these expense categories. So we ideally want to see a lot more in the salary and wages than anywhere else. But of course, we have projects that are heavier on equipment and others that are heavier on subcontractors. So it's it gives us a sense of where the money is being spent on the project. Table 5 gives us a breakdown by deliverables, so we can see where the projects are being. I didn't realize how small that was. So what deliverables are costing what, and it gives us, of course, where it's starting and ending, just so that we can understand some of the timings. And then the distribution by consortium members, so we can see that in this specific example, we have Supercluster contributing 37% of the cost, and the rest of the consortium members, these are the costs that they are carrying for the whole project. So it's just a bit of a quick analysis. It's not it doesn't have everything, but it gives us enough that we can understand if there are any flags or if there are any questions that we need to ask the consortium to elaborate on, or if it is participation, if it is integral role of the project partners. Check items over here is good to kind of make sure that you take a look at this before you submit the project, before you submit the proposal, and that is if there are any errors within the sheets, it will show. It will, for most of them, it will give you some description of what that error is, so that you can kind of and hopefully some guidance to close it out. So that's just to check to make sure that there's no errors before you submit it, and that's the template over here. So I did see questions pop up, so I'll take a pause for.
Yeah, there's just a question about stacking and in relation to government funding stacking limits.
Yeah, so it's up to 100% of your project costs. So that's the limit. Emma, did I answer your question? Is that?
Yeah, and is that what you're referring to in the Excel when it has stacking in the grid, in the table?
Yeah, so it may be government funding. We may also see private funders coming in who are supporting our projects as well. So it isn't only limited to government funding, but for government funding specifically, we are also, I think, within the claims process, they will also ask for information on that, because I know that that's something that when we report back to our funders, so I said they want to be able to understand what other government funding is being leveraged by our consortiums.
Gotcha. Okay, thank you.
There was a question, will the 43% of co-investment be calculated against all industry partners or only against the contribution by the lead applicant?
No, by all partners, all industry partners or non-for-profits who have private funding sources, who are members, who are at least regular members of the Supercluster, so regular or gold members of the Supercluster. So if you may be an industry partner who have decided not to be a regular or gold member of Supercluster, and you may be for profit, but you are not eligible for co-investment in that scenario.
I can just wrap up and summarize that comment by saying there's three things. They have to be, the costs have to be eligible, the type of cost has to be eligible, the organization has to be eligible, and the organization has to be a member of Supercluster. If those three boxes are ticked, then the Supercluster co-investment of the 43% can apply.
Perfect. And so Scott asked a question here, so that is there a report due every quarter or by major deliverable? So there is a report, so it's not by major deliverable, though there is some oversight within the contracting, and we'll go through that post-award what the governance structure will be. But just to kind of give you a sense of when you are putting together your costs that are related to project management, it's important to remember that with every quarter there is a spike in reporting requirements, and there is a bit of ceremony that is attached to ensuring that the strategic goals that were set for the quarter are defined. So it isn't automatic that you will finish the quarter and you can get the co-investment amount. We do want to make sure that you are delivering what you said that you were going to deliver. If that has adjusted and shifted across the life of the project, that appropriate transparency and communication has taken place. So there's a steering committee and there's a full governance structure in place that we would probably, we need another 45 minutes for that, but yeah, so we do have that. And then we would see that for every quarter, we have what is referred to as the milestone report. So it's a report that builds off this budget. and it allows you to tell us how you have been able to perform both in terms of delivery and budget spent for the project, identify core and key risks that have arisen or you see them coming up, and that it also allows you to reforecast both delivery and budget for the upcoming quarters. So there is an opportunity to re-baseline the delivery timelines and budget spend. So yes, we do have quarterly reports that we do that in. Should we add an individual line item for each employee in the project, or can we bucket the teams? Oh, please bucket the teams. As painful as it is for you to put that in there, it is equally painful for us to kind of to go through all of that with you. So bucket the teams, we are looking for estimates. We are not looking for 100% precision over here. So round it up, you can group the cost. I mean, it needs to be enough for us to be able to parse out and understand what the cost items look like. So make your descriptions as clear as possible. So you can absolutely bucket items. You can bucket it by deliverable, by teams, and then we can kind of work through those with you if we want you to break it out a little bit more than that. But cost items, so we would not want to see like your developer cost also be linked with any equipment that you're buying for that deliverable. So you should group it by expense type.
So we've got a little less than 10 minutes left. Should we just go through those last couple slides on best practices?
And if there are any more questions, then we'll see if we have time. But I've actually appreciated questions coming in the middle because it gives us a break from the slides. So a budget recap. So the budget recap, I'll give you guys a quick one. I know we spent a lot of time on it. I think the big thing over here is that we are looking for it to be estimates. We're looking for you to work through your funding arrangements. You have to, this is not a one-man show. This is a consortium. We're all about collaboration. There will be negotiations and refinements, and there will need to be agreements that are done. Financial conversations are never easy, but it is absolutely worth it for the health of the project and the consortium that you do those as openly and with as much transparency as possible. Of course, with the understanding that as you go through the various stages of the proposal, contracting, and the project, that the level of detail will shift across those as you go through that journey. Work with us. So the Supercluster team is available. Ask us questions. If you have a question or you think a specific item is confusing, talk to us, and we will hopefully be able to answer your question. And plan time to complete the budget. So it usually takes project team 10 days to complete the budget template, and that is really after you've done all the homework. Because once you start putting it into those Excel, you may, other than questions regarding the Supercluster model, they may be other items that you need to go back to different partners to kind of talk through. So give yourself time. Don't believe that this is like a one-day exercise. It's not 10 full days, but it just that whole process, that iterative process does take time. Next slide, please. And so that's it. That was my section. So back to you, Tanya.
Thanks so much, Nadia. So as everybody can tell from that walkthrough and Nadia's detailed description of funding flows and how the whole process works, this is a very robust tool, and if you use it together with your consortium, it's going to help you develop and really think through a lot of the elements of your whole project from that financial standpoint. So it is actually a very valuable exercise. And as you put everything together, I do want to emphasize here that your project manager, your consortium's project manager, is a key person within this whole within this piece, within the budgeting piece. And I often equate the project manager position to that of a translator. And we talk about this at the collaboration, the overall project level, but it also applies to the budgeting and the finances. Academic institutions, not-for-profits, government agencies, small businesses, big businesses, actually speak different languages in terms of how you do business and what you're trying to achieve. And in financial terms, that's true as well. You talk about your budgets in different ways internally. You cost things, you might even have different FTE definitions. And so this budgeting tool and this finance tool is an opportunity for your consortium to work with the project manager and then to work with Supercluster on translating how your different organizations might speak different languages, but you all are coming together for something that you want to achieve together as a consortium. And so you do need that translation exercise in order to make that, that a possibility and to give yourselves the most chance of success here. So on to the next slide. So the best practices that we would recommend that you think about as you're in this proposal stage is, first and foremost, attend this webinar. So I think we already mentioned it. I think Nadia mentioned it. You're ahead of the game because you've joined us here today. And this will be recorded. You can refer back to it. You can share it with other members of your finance teams as you're going through your process. So take advantage of this webinar and the other resources, which we'll show on the next slide. Other than that, do make sure that you've got one person holding the pen in order to do that translation exercise of pulling together company ABC and academic institution XYZ and bringing that together with all your different members. So make sure one person is holding the pen, but then also make sure that that person is speaking to the appropriate consortium member to get the information that they need. Recognize that it is iterative and it will take time, to emphasize what Nadia spoke about, and then do that planning work before you start doing the Excel. You will have to work on the Excel once, twice, 3 times and update it as you learn more things, but the more prep and planning that you do beforehand, the fewer times you will have to open up the fantastic Excel file and edit it and go through it again. So read the co-investment guidelines, read the program guide for the Tech Leadership Cycle 4, talk to your consortium about their deliverables and their workflows, and then get to work on this tool, and then take advantage of that budget tool that Nadia did that fantastic walkthrough of. It's our 4th iteration of this. We've learned a lot. We've built out a tool here that has a lot of strengths that's going to help you. So take advantage of that. Use that budget summary tool, use the check items. And if you go to the last slide, Annika, use us, use your resources. So all the reference documents that I just referred to are up on the website. You're going to obviously get a copy of this budget template, and then you've got that support team there, myself, Nadia, Wade in our finance department, and your investment leads as well. So with that, I will open up, that's the end of the PowerPoint, so we can open up for the last few minutes for any questions that weren't answered during the discussion.
I don't see anything in the chat. I don't know if you guys have anything on your end.
No, I think that means that people were able to ask questions throughout. I certainly hope that's the case. But rest assured, this meeting was not, or this webinar is not your last opportunity. If you do have questions as you go through those program guides, co-investment guidelines, and then get the template and start working on it, absolutely reach out and we'll be happy to assist. Thank you all for taking an hour and a half out of your day to go through this with us. I hope it's been informative, and we look forward, as Nadia said, we very much look forward to seeing exciting, bold, problem-solving proposals come through Cycle 4.
Thank you guys so much.